Good afternoon and very warm welcome to today's Trading the Markets Live, which is brought to you by the Live Trade Room. And what we look to do, this is unfortunately going to be a slightly shorter session than normal today, tomorrow and Friday. If you can just bear with us this week, that'll be useful. But what we will do is identify some of the trades that we're looking very carefully at, and we'll probably wrap this up in the next sort of 15 minutes or so. So without further ado then, if we can just start always with our risk warning. Of course, take a brief moment to familiarise yourself with our risk warning currently up on screen. Without risk, there is no opportunity for reward. It's a trade-off versus one for the other. But we do recommend all traders to take the risk part of that equation very, very seriously when you trade. And avoid, especially if you're new to trading, avoid trading with any significant size, and learn how to trade the financial markets as you go. So let's begin then with a review of some market moving news. So today we have an important news event, and it'll be the meeting minutes from the FOMC that we had a couple of weeks back. So the Fed are very eager to remain as accommodative as they need to be. They have suggested 2 rate hikes between now and the end of 2023. And we'll see really what the markets gauge from the actual minutes themselves. In terms of the discussions that have been had, and we might see some strong volatility around that particular period. So we've got that this afternoon. For the afternoon, nothing of any major concerns. Jobs opening figure, IV PMI figure impacting the Canadian dollar. Nothing of any major concern. Something that's been sort of taking the markets by storm is the ever reducing 10-year treasury yield. At 1.35 now. We were up a few months ago at 1.770, 1.75, something along those sorts of lines. So there is this obviously move, very significant rollover to the downside as far as the longer term treasury yields are concerned. And what's interesting is that we're currently seeing negative real yields in this market below minus 0.1%. And that's what makes this move almost quite difficult to understand, because if you're getting a negative yield on your money, why would it be, I suppose, a favorable asset class to put your cash into? Although demand is still very, very high. But what we're seeing this market roll over to the downside, and it's creating an uptick in markets like your global indices. It's almost giving them a green light to continue their moves to the upside, and we're seeing massive moves in US tech stocks as well. So let's get straight into the technicals. We'll see what the slightly better opportunities are. We were looking to trade some momentum off yesterday's moves across the euro dollar and the pound dollar. And as you can see, we've not been able to achieve that in these markets just yet. The euro dollar has every potential to continue to roll over to the downside. But what we're finding is we're kind of in this sort of sideways little pattern for a prolonged period. So that could just be brought down just a little bit further there, just to include those levels. So we've got this little sideways moving sort of 5-6 day little pattern, and we're really interested in the breakout of this little range, and we might get a little move lower pretty soon as far as the euro dollar is concerned. In addition to the euro dollar, the pound dollar, we're also looking at the dollar CAD. The oil markets took a bit of a significant roll to the downside yesterday, off the back of OPEC failing to come up with any kind of coherent solution. But there does seem to be this supply issue into this market, and it's encouraging prices to be pushing higher. But yesterday we saw a pretty strong bullish bit of price action, and we were anticipating further continuation above yesterday's high. And as you can see, we've not got to that level just yet in the dollar CAD. The same can be said for crude oil. Same can be said for the crude oil market. So we were interested to see if this market had enough to actually take that roll over to the downside, but the supply constraints are such that it's still supporting prices to the upside until OPEC decide to increase the supply of oil into the markets. And there's massive disputes between Saudi Arabia and United Arab Emirates. So let's see what comes of it. But a significant retracement of yesterday's markets, and we're seeing that across pretty much most of these markets. Sorry, I digress. I'll just go through the foreign exchange markets. So what we're doing is now, as far as the dollar CAD's concerned, is
we're just under 10 minutes away from the
reversing
top of the hour. So the emerging market data due in the form of Brazilian retail sales for May, month on month, seen at 2.3%, year on year seen at 17.5%. Also keeping an eye on the Swedish Parliament as well.
Okay, so we're just running back into consolidation now. So that's the difficulty with this trade. So we talk an awful lot about patience, and that's kind of where we're at with these markets. Similar kind of strong rejection in yesterday's trade. Big rollover, some strong strength in the dollar yesterday. But broadly speaking, we are trading inside this little range here, with actually breakouts to the upside, false breakouts to the upside, and also to the downside. So for now, it's just intent on moving sideways. So we really need the clarity in terms of direction. So yesterday's rejection, today's sort of continuation to the upside, really. If you look at, well, perhaps the 4-day high had a bit of a bounce off the low. Yesterday, strong rejection. Now today, continuation to the upside. So it's a little bit up and down. We do like the euro pound to the downside eventually. It's just been, there's a bearish bias to it, as you can see, but it's very choppy. It's very up and down quite a lot. So the pound yen, it was struggling to clear yesterday's lows. We were expecting some continuation, and we've seen a pretty strong reversal of that trade. So we prefer to trade the continuation trades, and we're not really getting that opportunity just yet. But it will be interesting to see if we hang around this monthly low. Similar situation, the pound yen. We do like this market below this little handle in here, and as you can see, it's really struggling to either open or close below that 152.58. So again, just a lack of kind of clarity in terms of what we're likely to see in these markets, or what's likely to happen next. Gold now is an interesting market. The bond markets are not concerned at all about this inflation story, but the price of gold now, especially with the dollar weakening, is a hedge against inflation. And what this represents is a bit of a structural failure trade to the upside potentially. So further upside we would expect from here. But we do have yesterday's high, which is likely to provide some resistance. So if we look at it on an hourly time frame, we're just climbing up to that level now. So the overall bias is very much to the upside, bottom left to pretty much top right. So we're seeing this little bullish move, strong correction here before we start to see the grind further back to the upside. So a break above the 1814 would actually give us that structural failure trade to the upside as well. So because this is resistance now, so we'd prefer to probably wait now for this market to break above the 1814 level. But absolutely the bias to the upside is without a doubt to the upside, so it's something we can keep an eye out for. So a buy trade in gold above 1814. Right, I'm just looking, very conscious of the time. Unfortunately, we do have to wrap up this this broadcast now in just a second. Yeah, for Con James, good afternoon. Your opinion on whether the Fed meetings minutes will have a big move on the Dow Jones and NASDAQ and gold. Yeah, interesting observation. So the interesting thing about the last FOMC was around the fact that the Fed are increasing rates. So we know that there's 2 rate increases. Now the market seems to be very comfortable with that level of increase. So I would say they would threaten a little bit more the moves we've seen in the Dow Jones and the NASDAQ. It would threaten them slightly because maybe there is a little bit more concern over the pace of the tapering the bond buying program, and perhaps there's some conjecture regarding how many rates increases. Maybe there's suggestions that that they might be increasing the pace at some point in the future, and when these rate hikes are likely to kick in. But the bond yields are creating a bit of a situation for these markets. Very supportive of stocks. So stocks we would anticipate further to the upside. There's your NASDAQ. We're very close to all-time highs as well as the Dow Jones. I suppose the simple or straightforward answer is we almost have to wait and see. We've seen moves like this since the FOMC announced 2 rate hikes, which is very, very counterintuitive. it's the unraveling of this sort of low interest rate environment, and the returns on the real yield are virtually non-existent. So really, traders and investors are still looking to the equity markets for some decent return on their investment. It's just becoming, from a valuation perspective, it's becoming a lot more difficult, and Bitcoin is just drifting sideways. So really, the market to keep a close eye on would be above the 1814 in the gold market, and perhaps something like the S&P just above. You see, again, you'd be talking about buying this market above the all-time high, which again is not a position, or it's not where we're comfortable trading. So is that okay, Fakon? We'll unfortunately, I do apologize. Personally, I need to end the broadcast, and unfortunately the same for tomorrow and the day after. So it's just a quick little video on YouTube that we're just putting out. So apologies, we don't have the time that we normally have for the analysis. So on that note, guys, we do need to shoot off. We'll be back again tomorrow before 12:30. Actually, we'll be able to go live tomorrow. So if you can join us for that, that's fantastic. Yeah, look, apologies for needing to rush away today, but we'll be back again tomorrow. So if you can join us for that, that would be great, and we'll speak to you soon. Thanks so much. We'll keep an eye out for the gold trade to the upside, and potentially further upside in markets like the S&P, and we'll see how we get on with those. So from everyone here at the live trade room, take care, have a lovely evening, bye for now.